We start with the story of choraku. That's a Japanese term meaning falling behind. In the 1980s, Japanese industry was the envy of the world in a variety of sectors such as automotive, electronics, and steel. As a result, asset values went up, particularly here in Tokyo, where real estate values went sky high, supported by patient capital that did not demand a lot of returns. The 1990s, though, saw that asset bubble burst. And when the Japanese government and Japanese banks did not step in aggressively, they took what was a lost decade and turned it into a lost 3 decades.
Most people's expectation of Japan or business mindset of Japan is 30 years of stagnation.
I think, we call the lost ages during decades, and we do not have a substantial growth in Japan.
Japan faced the deflation for very, very long time.
Japan has been, suffering from deflation for more than 2 decades.
In the late 80s, Japan's economy grew by as much as 6.7% a year, only to have that growth plummet for most of the next 30 years, hovering between 0 and 2%, and contracting during the Great Financial Crisis and the COVID pandemic, relegating what had been the 3rd largest economy in the world to number 4 as Germany surged past. The Nikkei stock market went 34 years without setting new highs. Japanese government bond yields turned negative and stayed there for years. But all that could now be changing as Japan emerges from those lost decades.
What a lovely day in Tokyo.
Marc Rowan is CEO of Apollo Global Management.
This is a savings culture. And holding on to your cash or leaving your money into JGBs for the past 30 years has been fine because there's been no inflation. In fact, there's been deflation. All of a sudden, you have closer to 3% inflation. You have interest rates up for the first time, and that savings is going to be deployed productively. And now some of it has to go toward retirement. They will want better solutions for retirement, but some of it is just going to keep up with purchase price and purchasing power. I think about what's happening in Japan, and in Japan, they're going through generational change. And it's generational change in corporate governance, it's in interest rates, it's in government policy. And in many ways, they are the first of the Western democracies to face real aging, retirement, and high levels of government debt. And what's happening here is totally different than people's expectation, because most people's expectation of Japan or business mindset of Japan is 30 years of stagnation. And that is so dynamic here today.
The thing that got things going again for Japan was, ironically, adversity, as supply chains came under stress from the COVID shutdown and a war in Ukraine put pressure on energy prices, a big problem for a country dependent on oil from abroad.
With the supply chain breakdown, corporate has excuse to transfer the price to the retail. So now the CPI started to suddenly, which has been 0 or negative for a very long time, suddenly went up to almost 3%.
If she can get 2/3, that's a lot, right?
Eiji Ueda is head of Asia Pacific for Apollo.
Everybody has to think differently. So with the deflationary environment, cash has been the king, but with the inflation at close to 3%, cash is not the right assets to own. It's actually the worst assets to own. So that has to put the pressure on a lot of people to think about things differently.
Even before the return of inflation, those responsible for Japanese markets were thinking differently, starting with Prime Minister Abe's call for market reform back in 2015.
And it's true that for maybe a good decade, Japan did struggle in finding its way out of that banking crisis.
Mireya Solís is director of the Center for Asia Policy Studies at the Brookings Institution and author of Japan's Quiet Leadership.
But the fact is that we have overused the image of the last decades, because this has not been a period where Japan has stood still, and people refer to this period as 30 years, and a lot has happened in the economy, in the politics, in international projection of Japan that actually shows that undercurrents of change have repositioned where Japan stands today. Some areas actually there was a lot of progress. I think in the area of corporate governance, you do see important changes there. I also believe that the notion of womenomics, the idea that Japan needed to create conditions for women not to have to choose between a career career and a family, raising a family, those also were very, very positive, so much so that Japan actually has a very high level of female labor participation.
As much as Prime Minister Abe may have laid the groundwork for reform, the state of the economy did not demand the changes he wanted. For that, they needed 3% inflation to kick in.
Well, it has changed everything. It has changed the politics. It has changed the main economic challenges that the country faces. And I think in many ways it has redirected areas where reform is necessary.
Now, inflation has returned, and there's a new prime minister in town, one who's just won a landslide victory and seeks to take Abenomics reform to a new level.
So many significant changes are happening in the Japanese, not only Japanese market, but also Japanese society.
Hiromi Yamaji is Group CEO of the Japan Exchange Group, which oversees the Tokyo and Osaka stock exchanges.
What was the role of government, the Japanese government, in the reforms?
I think, since the Prime Minister Abe supported our governance reform back in 2015, I think all the successors of Mr. Abe, like Mr. Suga, Mr. Kishida, Mr. Shiba, and the current Ms. Takaichi, all of them were quite big supporter of governance reform because all of them were convinced that growth of the private sector is essential for the growth of entire Japanese economy.
Since taking over the TSE in 2021, Yamaji has implemented a series of reforms to encourage Japanese companies to become more profitable and more accountable.
Your reforms of the markets has various aspects to it, including price-to-book ratio and interlocking ownership of equity and independent directors. What are the most important ones?
I think to transform the mindset of the management of the companies. That's very important and also probably the most challenging thing. And PBR is just kind of a financial indicator to just gauge how much you progressed. But I think a fundamental challenge is to transform the mindset of the management.
Not all minds are willing to be transformed. Have you had some management changes in order to respond to the reforms?
Well, I think, at least once a year, we've analyzed the current situation of the Japanese market or Japanese companies, and we are not the entity to assess the progress. The global investors is the people who assess how much progress we've made. And last year, most recent one, we did a analysis of a current situation in December last year, based upon the 400 global investors, domestic and overseas.
If the markets are any judge, Yamaji's efforts are bearing fruit.
Last year was a record high, more than we have 5,100 mandates, and the total amount was 35 trillion yen. Both of them are record high. And that means that the buyer side seeking for the, more growth or urgent needs for growth, and the seller side is trying to reorganize their business portfolio.
Tokyo Stock Exchange pushing the corporate to create more efficiency in the capital usage for corporates. And ROE has been very, very low. And more than 50% of the company listed in Japan has been trading below the book value. So they are pushing for capital efficiency, and they need to explain the reason why they're trading below the book.
The Japanese push for higher returns in response to reflation comes against the backdrop of a long-term challenge that's increasingly common in major economies around the world: a rapidly aging workforce.
Population between age 14 to 65 hit the peak in 1990. And since then, because society started aging, people spend less, so always demands shrink faster than supply. So the country faces long-term deflation and low growth.
I think we're looking at things that are structural, that are going to take place over the next 5 to 10 years. The need for Japan to provide for its aging population and to deal with its aging population, the need for Japan to finance what it needs to finance, and the opportunity that Japan has.
Japan responded to the challenges of its aging workforce by adding workers from groups that had been on the sidelines.
Well, this is clearly one of the most serious challenges because the sheer drop in the level of the population, the absolute numbers, but also the graying of the population. The other one is, of course, to bring in women into the workforce, to bring in the elderly who in Japan tend to be still very active, and to make sure that you can, as much as possible, maximize labor participation.
But there is a limit to how many women, elderly, and foreign workers Japan can bring into the workforce.
What does reform of capital markets do to help that problem?
I think, the corporate governance reform says that we'd like to see more active female workers in the workforce, and also more senior persons are working freely in Japan. Now the labor force increased in Japan. But obviously a female job participation as well as the senior members' job participation, there's a ceiling. I think we don't expect too much from those new forces coming in. So I think Japanese companies has been making a huge investment into automation or digitalization, AI usage. I think those are very important to enhance productivity, even though our population has been shrinking and also is going to shrink in the future.
What are the large long-term capital needs that companies say, I need to have this for a long period of time?
This is manufacturing. This is energy. This is AI and data. This is infrastructure. These are the big buckets that we're looking at. And the scale just of the infrastructure market, or as I say, just of the AI, data, energy market as one package, is beyond anything we can comprehend. This is measured in trillions. Sometimes I joke and I say we're about to spend every dollar since the invention of fire. And that's what we're doing. We are, as a world, going to issue more debt, access more capital in 2026 than ever before. I think this is ultimately about growing the pie. I think the Japanese were very defensive for a long period of time with good reason, given what was happening in the home market. I think there's a new swagger.